Folks, it is time to talk about arguably the most controversial stock in the entire stock market, which is Palantir stock. And I want to go through this article that was written about Palantir and why this individual believes Palantir is going to $5 a share. Yes, you heard me right, $5 a share. And I've seen some people reference this article recently, but I haven't seen anybody really go through it, go through the details, exactly what this individual is saying, exactly why they believe it's going to $5 a share, which is obviously massively down from here. And I want to give my perspective on the points they have. And whenever I'm in the stock market, I try not to get offended if people have a different opinion than me on a stock. Now, Palantir is not a stock I personally own. However, this is a stock I feel like it is a buy here, okay? But I don't get offended if somebody writes a negative article or something like that. I always try to give people respect. I always try to look at it and see if it's just a bunch of BS or if there's any truth to the matter. And so that's why I really want to get into the nitty-gritty details here in this video and go through exactly what this individual is saying. So they say Palantir just slumped to a new 52-week low, which is true. At this time when this article was written, about a week and a half ago, Palantir is at a $35 billion market cap. Here today, it's under $30 billion now. They say Palantir stock is set to fall further due to a lack of defined moat, scalability in the business model. So we're going to go through all this. And I hope you guys appreciate this. As always, I appreciate you joining me. I appreciate you guys being subscribed to the channel and joining me for these in-depth kind of breakdowns on what somebody's saying about a stock that, is very, very popular. Palantir is the most controversial stock in the stock market to me now. It used to be Tesla a few years ago. Now I feel like Tesla's just doing their thing and it's not as, gets everybody riled up. Palantir stock gets the people going. That's what I can tell you about that. That's the truth around Palantir. And it's not, this is the type of stuff that used to happen with Tesla stock back in the day. Tesla stock bear case is $10. I remember when that came out in 2019. Oh man, that was something else. Let's just put it that way. Tesla now is on a split adjusted basis is, oh my gosh, I don't know, $5,000 a share or something like that. So yeah, they thought it was going to 10, but I remember the Everything Money guys, they said, Tattoo Chef's going to 5. What is it about $5 a share? Seems like a lot of people are always saying $5 a share, $5 a share. And here today, just to kind of catch you up on where Palantir did hit a new 52-week low here today of $14.54. It is now under a $30 billion market cap, and the stock price has just been in a vicious downtrend, okay? Wow, you want to talk about coming out swinging? Oh my gosh, okay? Right off the bat here, the stock price of software company Palantir, PLTR, continues to fall, but the company is not a bargain that should be purchased on weakness. Palantir lacks a distinct value proposition, scalability, a moat, and profits. Palantir's stock count is increasing and its fair value may be no more. He says no more than $5. That's even another big statement. It's not like fair value is $5. It's no more than $5. So basically meaning he believes the stock is worth $5 or less than $5. That's what I call coming out swinging, like, wow, say it with your chest out. Oh my gosh. So I want to really focus on what he's saying here, and then we'll get into my points there, okay? Palantir's non-scalable IT business. Palantir must not have been a pleasant experience recently. Palantir has dropped 63% since its all-time high of $45 in November, which was 2021, right? And the stock has not lost nearly 40% of its value since then. Still, I don't think the sell-off is over, and this could be the start of a larger consolidation, and this is why. Palantir is doing an excellent job of selling its data collection and algorithm-based prediction business to investors with a steady stream of announcements announcing new contract wins with various government agencies. Palantir's biggest win was an $823 million U.S. Army contract, which the company proudly announced in October. Other contracts followed, including a $43 million Space Systems Command contract for the delivery of a data aggregation and decision platform. Palantir also stated in its 3Q21 business update that it has closed 54 deals in the third quarter with a deal value of at least $1 million, 33 deals with a deal value of at least $5 million, and 18 deals with a deal value of at least $10 million. Palantir did in fact sign a significant number of deals in 2021, with the company's total deal value increasing by 50% year over year. It's very important, to $3.6 billion at the end of the third quarter. Add that to the excitement that Palantir's main business is big data, and it's easy to understand why investors had bid up Palantir's stock price to where it is today. Bid up the stock price. Stock price at 52-week low, so, so first off, you make a pretty bullish case here. This individual's making a pretty dang bullish case for Palantir around the revenue growth, total deal volume increasing 50%, and we can't call it bidding up the stock price when it's at an all-time low, right? It just doesn't make sense there, but anyways, Palantir's success in acquiring new customers resulted in a significant revenue increase for the companies last year. Revenues increased 36% year over year to $392 million in the third quarter. Both the government and commercial sector expanded at rates of 34% and 37%. By the way, why people are really excited is around the commercial sector. And big companies using Palantir, and maybe mid-sized companies using Palantir over time, respectively. Palantir's revenue surge resulted in an optimistic forecast of revenue growth of 40% this year. Overall, Palantir's revenue is increasing. Once again, more and more good news. Despite a positive revenue trend, Palantir fails to impress on a profit basis. Okay, now we get to the juicy stuff. All right. And 2022 is unlikely to see a significant change. The company, which has been in business since 2003, has invested billions of dollars in its foundries, quote, foundries, or software algorithms, platforms, has yet to generate profits. Palantir primarily sells IT services to businesses and governments, and it lacks inherent scalability. Now, I would love to see a little more detail on why it lacks inherent scalability, and that would be something that I definitely would appreciate here. Palantir lost $102 million on revenues of $392 million in its most recent quarter. In 3Q21, the loss ratio, the amount of money the company loses in relation to its revenues, was 26%. Palantir lost 26 cents of every dollar of revenue according to this ratio. Palantir had a loss ratio of 33% from January to September. The big data company is still losing money after nearly 2 decades of operations. Unsurprisingly, Palantir's profit forecast for 22 will be negative, this individual says. We'll see about that. Okay, we'll see about that. Palantir is trading well above its $5 fair value. The market has settled on a revenue growth rate of 30% for 2022, which is consistent with Palantir's revenue forecast. Palantir anticipates a short-term increase in revenue to 40% this year, but claims that annual revenue growth of 30% should be expected until 2025. Palantir's revenue is expected to increase 30% this year, bringing the company's total revenue to just under $2 billion. And this is kind of the forecast. We're going to get into all those numbers in just a moment. I just want to wrap up with all the points this gentleman's making, and then we'll get into all my points. By the way, make sure to subscribe to this channel if you're not already, and download the Hungry Bowl so you can listen to Palantir earnings calls right inside our app. This growth may appear to be impressive, but it is backed up by substance, as Palantir has no profits. In fact, the company has had a staggering $5.3 billion in accumulated deficit, the sum of all previous losses, demonstrating that Palantir has failed to create a business model capable of delivering sustainable profits over the last 2 decades. How many more years of losses are investors willing to accept before they can share in the company's profits? Woo! Okay. Tell us how you really feel. Well, first off, let me just make a quick point, and then we'll finish up with him, and then we'll get into my points, okay? I just want to make this point. When a company is a private company, a lot of times the focus is all on just revenue growth and getting the business model to a place where they can become a scalable, massive beast, right? The goal with becoming a public company is for early investors to be able to potentially sell out shares, to raise even more money if you need to, right? Or if you want to. Even better liquidity for investors, or just liquidity in general, like raising money, things like that. And lastly, what do companies that go public, what is the expectation? That they get profitable, right? And so clearly the founders and the co-founders and everybody that's invested in Palantir feels like this company is on the verge of getting to profitability. They wouldn't have taken this company public likely unless they were at that stage where it's like, okay, they're going to become a profit beast over the coming years, cash flow machine. And that's the life cycle of mostly Silicon Valley companies we see nowadays, right? And so I think that needs to be said right here, right off the top, is that's like the life cycle, okay? And so going public is usually a pretty good thing, because that's seen as like, hey, we're going to get to major profitability here, okay? Now, this is interesting the way he words this. He says, what irritates me the most is how such a company can trade with a $35 billion market cap. It irritates you. Like, why does it irritate you? You know what I mean? Like, I don't get it. Like, if some company is trading at what I feel is an insane valuation, it's like, whatever. You know what I mean? Like, okay, stock can trade at that. Like, whatever, it's none of my business, whatever, okay? But it irritates this gentleman that it can trade at a $35 billion market cap and 22 sales multiple. We're going to go through multiples in just a minute. Palantir has consistently high loss ratio and accumulated deficit in excess of $5 billion. Are investors willing to pay 22 times sales for a loss-making business? It can be difficult to understand why investors are willing to pay top dollar for such a company, he says, okay? Because Palantir's valuation is so far out of line with the company's fundamentals, the stock remains significantly overvalued despite a drop of more than 60%. Given the complete lack of profits and decades of squandered shareholder money, I believe a sales multiple of 5 for Palantir is extremely generous. He just used the word extremely generous and a price to sales ratio of 5. Wow. Okay, that translates into a fair value of $10 billion and equates to a $5 stock price. Okay, $5 stock price. Now, the last point this gentleman makes here, and then we'll get into my stuff, is enjoy the dilution. The number of shares granted to insiders is increasing at Palantir, but not in a good way. Dilution is a major issue for Palantir, and executives will have to answer to it sooner or later. Of course, if dilution continues unabated, investors will pay the price. Now, when it comes to public companies, pretty much every single public company has dilution over time, share-based compensation, all those things, especially a company that's went public in the past year or two, like they're all going to have this. So the whole dilution thing, like that's expected, that's known, and that doesn't take me by surprise at all, right? Alrighty, so let me start kind of, picking apart these points and things like that, right? So first thing I want to make is basically there's 10 analysts that cover the stock. The company is expected to have a positive net income in 22. I think that's very, very important, of 20 cents. You have high estimates of 25 cents. You have low estimates of 16 cents. So basically what this means is the company is expected to have a positive net income next year and expected to make money on the bottom line. So I understand he's pointing back to the years and years of losses, but as an investor, all we care about, right? All you should ever care about is really where things are going in the future, because that's going to be what dictates where your company goes. If you made a ton of money in the past, it doesn't mean you're going to be, for sure making a ton of money in the future. Look at how much money BlackBerry was making a decade ago or 2 decades ago, right? A decade and a half ago versus, their situation now. And so you look at the net income that JCPenney's had a decade ago or 2 decades ago versus what net income JCPenney's has now, or net loss, right? And so you can't just say, well, they lost a bunch of money in the past, so they're going to lose money in the future, or they made a bunch of money in the past, so they're going to make a bunch of money in the future. It doesn't work like that. All that matters is the future and where this company's going. And clearly, analysts believe that this company is going to be profitable in 22. So that's very, very important. This is likely no longer going to be able to be cast away as a unprofitable, money-losing company, as this gentleman says, right? Then on top of that, why are most people in Palantir stock? Because they believe this is going to be an extremely sticky business model and they have unbelievable growth, right? Almost 40% growth expected here in 21, and then 22, 30% plus revenue growth expected in 22 and at 30% on average until 2025. That's why people are in this Palantir stock, because of the revenue opportunity and the long-term profitability this business model will likely bring in, right? So that's first 2 points I want to make here. Now, in terms of a forward price to sales ratio, right now Palantir is trading at a 15 forward price to sales ratio, which takes what analysts expect for revenue coming in 22 versus where the market cap's currently at. $2 billion of revenue expected in 22. Market cap's currently at about 30 billion. So that's a 15 forward price to sales ratio roughly, okay? 15. Got to keep that number in mind there. Now, if you're going to compare this, you want to compare it to companies that are seen as kind of like peers, right? None of these business models are going to be exactly the same, but there are certain stocks in the stock market that are seen as kind of like, peers of Palantir, and where those companies kind of trade at, right? One would be Snowflake. Once again, these business models aren't exact, but they're roughly in the same range, so that's why people like to compare them, right? Snowflake trades at a 40 plus forward price to sales ratio, a 40 plus. Remember, Palantir is at a 15. So nonetheless, like Snowflake, and look at the negative EPS for this company. right? So, I mean, if you're going to pick on a company, are you really going to pick on Palantir over a company like Snowflake? Okay, it's just interesting to go there, right? If you look at CrowdStrike Holdings, which is another company that is seen as kind of being in that realm of a Palantir, right? A 20 forward price to sales ratio is where CrowdStrike Holdings trades at. So, up there. Zscaler, Zscaler as they call it, 25 forward price to sales ratio on this one roughly. So what we're finding is forward price to sales ratios are much above where Palantir is trading at for all these other companies out there. And I do wonder if Palantir has been held back because of the, let's call it, all the retail investors leaving the market over the past year. And because Palantir became very much a retail investors type stock, I wonder if that's hurt its stock price, whereas some of these other ones have held up better because they haven't been as attracted from the retail crowd, right? So that is something to consider. But the fact is, Palantir is trading at a far less forward price to sales ratio than any of its peers, let's call them that, okay? So that's very, very key, and we can't just act like that doesn't exist when it comes to valuation. Now, when it comes to Palantir, if we go back in the history books and we look at Palantir's funding rounds in the past, right? This company had a valuation of over $20 billion on it in 2016. It's under $30 billion today, okay? So that can tell you two things. The first thing it could tell you is maybe Palantir was massively overvalued in the private markets at that time, and maybe it didn't deserve a $20 billion plus valuation. Maybe it deserved a $5 billion or $10 billion valuation. It could tell you that potentially. The second thing this situation could essentially tell you about Palantir is this is a company that could be potentially massively undervalued. And think about all the progress this company has made since 2016. Think about where their revenue was in 2016. Think about all the progress the company's made with their technology over the past 5-6 years. Think about the fact that this company is expected to do $2 billion, if not over $2 billion of revenue in 2022. And we're talking about a valuation that's hardly gone up on this company, okay? This is something I'm looking at and I'm saying, maybe this is a very, very, very undervalued stock at the moment. No, what this gentleman's saying, to get back to his point, right, is it's a $5 stock. Or he says even under a $5 stock, maybe potentially, right? If this is $5, then you're putting about a $10 billion market cap on this company. Well, the company's expected to have $2 billion of revenue expected in 22, which would put it at a 5 price to sales ratio. Come on, man. Come on. That's just not where these type of companies trade at. If this is, some other company, that's fine, but not like infrastructure companies in the software space. Like, that's not where these type of companies trade at. A forward price to sales ratio is a joke. It's like wishful thinking. It's like a kid. I got 3 kids, right? They could ask for all these crazy Christmas presents, and it's like you're not getting those Christmas presents, kids, right? It's just unrealistic. And for a situation like this, is Palantir really going to get a 5 forward price to sales ratio on it? Come on, man. That's a joke. That's nothing more than a joke. However, when things like this are talked about, right, and this is very important, when a stock's downtrending, folks like to look at this and they say, oh man, maybe this is accurate. Maybe it can go down to $5 because the trend is going down. No different than if stocks at this time last year were going up like crazy, and let's say Palantir went to $40 plus, right? Folks are like, oh, this baby's going to 60, 80 by this time next year, $100. When you're kind of in this, make sure you download Hungry Bowl, by the way, on your iOS and Android store now. When you get into this sort of cycle, you anybody can throw out any price now at this point in time, and people are like, oh, maybe it's going down there because you're in a down cycle where a ton of these growth stocks have just gotten obliterated, right? But at some point, the market stops their rationality, and at some point, companies have to be valued to where they're going over the coming years. And right now, growth stocks have been thrown out of this market. We know this, right? And even companies that aren't super high P names, growth stocks have been thrown out of this market. Small caps have been thrown out of this market. Mid caps have been thrown out of this market. Almost everything's been thrown out of this market other than maybe Apple and Google and Microsoft and a few of the other biggest companies in the world. Outside of that, all these companies have been thrown out. Oil and gas has held up pretty well. Bank stocks have held up pretty well. But, this is that time period we're going through where a lot of folks are going to throw out some crazy price targets on some stocks. And they're going to feel more ambitious about throwing out those crazy price targets when you're in a down cycle. No different than when you're in an up cycle with stocks, people throw out some crazy price targets. Like I remember, when Tesla was going on its massive bull run, which you could make an argument that still might be on its bull run, right? But I saw some price targets that even me as a Tesla bull, I was like, what is this price target for Tesla? Like, this is just ridiculous. But when you were in a bull cycle, you could throw out some, just insane price targets that like somebody was like, what? That's like inconceivable. And so that's just something important to kind of keep in mind. And you might see more articles about Palantir or other stocks in the future that have some really low numbers on it. And it's like, really? That stock's going to that price? They think it's going to that? And it's really important to give the other person respect, look at what they're talking about, break it down, and then say, does this make any dang sense? And in Palantir's case, it really doesn't, based upon when you look at its valuation, based upon its growth rates, based upon where this net income's likely going over the coming years. This is just a business model that's just getting to its infancy of profitability. Like imagine where this company's going to be 2 years from now, 4 years from now, 6 years from now. These are important things to kind of keep in mind, especially when you put up those type of revenue growth rates and you've scaled the business. They're going to be in a pretty darn good spot. So anyways, guys, that's my opinion on this Palantir stock going to $5. Let me know your opinion in that comment section. I would love to hear from you guys. As always, make sure to subscribe to this channel. All we do is talk stocks in the stock market all the time and do some detailed videos like this. Much love and have a great day.